Welcome to the webinar series titled, How to Thrive in the Supply Chain Revolution. My name is Josh Shanani, partner in charge of the Manufacturing and Distribution Group at Sachs LLP. Sachs is a multidisciplinary accounting, tax, and advisory firm headquartered in Clifton, New Jersey, and the M&D industry is the biggest vertical we serve. We're also one of the top 10 fastest growing firms in the country, as identified by Accounting Today and recognized as a top 5 all-growth firm in the Northeast by Inside Public Accounting. My normal co-host, Sandy Vosk, founder and CEO of Advantage Technology Solutions, is currently out at the IWLA conference, but a shameless plug for Sandy still. Advantage Technology Solutions is a leading technology provider in the warehouse and logistics industry. Sandy is also the co-founder of the Supply Chain Experts Group, a tri-state networking group of individuals who service all aspects of the supply chain, designed to share industry knowledge and create opportunities for one another. Ongoing technological advances and increasing customer demands are transforming the supply chain industry at an unprecedented pace. To be successful in this rapidly changing business environment, your company will need to consider new and better ways to meet customer requirements and allocate the right people and resources quickly, efficiently, and profitably. Sachs's manufacturing and distribution practice has joined forces with Advantage Technology Solutions to provide you essential, need-to-know insights from industry experts on technology and the supply chain revolution. We hope to help you expand your customer base, enhance your revenue stream, and optimize the operational efficiency, profitability, and security of your business. Throughout these webinars, we will be joined by other supply chain experts who will bring knowledge, expertise, and experience to the topics presented. For more information about these webinars, please go to www.sacsllp.com news and event page for the full details and registration links. Today, I have the pleasure of being joined by Matt Hahn, who is the Chief Technology Officer at Sachs Technology Advisors. Matt has over 25 years of experience in the technology industry and 15 years of experience serving businesses by providing customized technology solutions to meet their unique needs. I also have the pleasure of being joined by Sean O'Rourke. Sean is a cyber liability consultant for Combs & Company and works with small and mid-sized businesses to mitigate the myriad of financial risks posed to their technology and data by internal and external threats. And I'm Josh Shanani. Today's presentation, cybersecurity. I'm going to turn it over to Matt.
Hello, and thank you everyone for attending the webinar today. Today's agenda is going to be cybersecurity. And while it's a very wide and vast topic, we're going to touch on some specific areas within cybersecurity. Some of the areas we're going to touch on today will be threat to potential impact of a cyber incident on a business, best practices for preventing a cyber breach. We'll talk about business continuity and disaster recovery planning, and most of all, the importance of cyber liability insurance and how it can help hopefully save your organization money. So threats and the potential impact of a cyber incident on a business. I guess the best way to get into this would be to present a company, something that we could all sort of understand and digest. So let's create a fictitious business, if we will. We'll call it ABC Nuts and Bolts. This is a manufacturing company that sells to the public, wholesalers, and distributors. They have approximately 50 employees. They have a proprietary formula for their galvanizing process. Orders are processed via the store, their phone, as well as their websites. And order payments are accepted via credit card, ACH, as well as checks. From a technology profile, this company really only calls an IT provider when there is a problem. They're not so much proactive with respect to maintenance or software updates. They currently back up all their data to a USB drive. Their employees, unfortunately, are not trained with cybersecurity awareness. And from another aspect, they do not have any acceptable usage policies in place to help dictate the way the end users use technology.
Matt, sounds like a recipe for disaster.
It certainly is not a helpful situation to start on. So I think the best way to start this is to dive right in and let's create a cyber incident, if you will. Let's meet Janet. Janet's a company owner. Janet's working very hard and receives an Adobe file that's disguised as a sales order from a customer that she knows. So working very fast, the file with this email contains ransomware, which can worm out to her company's network and shared files to it can worm out to their network and connect to shared files on their network server and encrypting all of the data that they have access to. While Janice wasn't expecting this order, her client sent it via email and she's very eager and excited to open it up. When she opens up the email, the following screen appears on her desktop. Now, many of you have maybe seen this type of display before, but essentially this is a ransomware screen, and it's essentially saying you have X amount of time left to provide X amount of dollars by way of Bitcoin to gain the decryption key to get all of your data back. Now, what does this really mean? Let's talk about what the ramifications of what Janet had done. So after opening up this email, that ransomware not only infected her local machine, but also infected all the files and applications located on their application server. So essentially, the 50 employees are now unable to operate their line of business applications. The infection that encrypted their data has also encrypted their proprietary formula, putting them completely out of business. What makes matters worse is that the last backup that took place was at 7 o'clock at night, while this event happened at 3 p.m. on a Friday. So that means that all the work that was backed up between the last backup and 3 p.m. on Friday was completely lost. All this work times 50 employees. Let's create another incident. Let's meet Doug. Doug is the finance manager. Doug is currently on break and gets a notification on his work computer that a good friend sent him a cool video through his social media account, whether it's Instagram, Twitter, Facebook, what have you. The seemingly harmless video is corrupt and carries a keylogging service. So it's not uncommon for Doug's friend to send him these types of videos via social media application. And without hesitation, Doug opens the file, which installs a keylogging system on his computer. And without Doug knowing, now everything he types into that computer is now captured.
So Matt, what does keylogging mean? What does that mean?
Sure, keylogging is an application that's installed stealth, meaning the end user would never know it's installed, and it essentially captures everything that's typed in on a keyboard at a computer and sent to a remote host. So the value of something like this is, let's say someone logs into a website, they could track what website they went to, they could type in the username, and then they could type in the password. In many, many cases, a lot of people use the same password and even email for login to certain web portals. So in many ways, Josh, they're giving up the keys of the kingdom.
Got it.
So like as mentioned in the keylogging service, everything Doug types now is now sent to a remote host. As we identified, Doug is the finance manager. Doug's responsibility is to process all orders for clients via their credit card, ACH, and will most likely receive fines for not managing PCI information more securely. Customers must now be called and informed that there's a possibility that the credit card information has been stolen. To make matters worse, what's really a problem is that the reputation of ABC Nuts and Bolts is now dented.
So let me ask you a question. First is PCI. What does that mean?
PCI is a payment card industry. Essentially, this is a governing body that dictates how information regarding credit cards is to be stored and managed in a secure fashion.
Got it. So I'm thinking out loud, right? We kind of went through the first incident. We're going through the second incident. From an insurance standpoint, what's going on here? Are we covered? I got a couple questions for you.
So to your first question about are you covered, when I was in technology, our favorite word was depends. Well, that still applies here. It all depends on the types of policies that you have in place. Typically, cyber liability insurance, especially the way it's being standardized today, would have covered a lot of the ramifications of the first two incidents, both in terms of lost money, in some instances in terms of business interruption, and certainly, as Matthew said, in terms of ABC's reputation being dented, it would have provided some financial coverage so that you could help to rebuild that reputation and the trust in terms of its from its customers. Again, though, that word depends comes into play here. First of all, you have to have the policy in place. Second of all, you have to prove that you weren't negligent when you file a claim. Carriers are becoming a lot more strict since claims have started to go up on the cyber side to make sure that you're doing things right.
What does that mean that, companies can't be negligent in how they file claims? Just can you give a little bit more background on that?
Sure. So the most obvious example in the last few years is Equifax. Equifax admitted that the breach that they suffered was due directly to them not patching a software vulnerability on one of the servers that they utilized. Matthew made reference to that this company does not proactively do that. Well, that for a lot of carriers would be negligence and would essentially void any claim that you would make under the policy that you have. Again, that is very generalized. Every situation is very specific. When it comes to these two incidents, however, these are more human errors than they are negligence. And for the most part, carriers are willing to cover human errors as long as they're honest mistakes.
Okay. And then just going back to the first example, in the ransomware application, they asked for us to forward our Bitcoin. Now, a lot of times we think about cash. There's a lot of uncertainty with cryptocurrency, Bitcoin, things of that nature. Is that something that can be covered under an insurance policy, or is it cash?
So you basically turn cash into Bitcoin to pay these ransomwares. And for the most part, most cyber liability policies will now cover basically what they call cyber extortion, and in which case they will compensate you to pay the ransomware to get the unencryption key to unencrypt your data.
And they ask for the Bitcoin because it's harder to trace?
Untraceable. Yeah, it's virtually untraceable. Yeah.
Understood. Okay. So Sean, then from your standpoint, cyber incident 1 and 2, which is worse, or there is no difference?
It all depends. As we're talking about supply chain, I would probably say they're both pretty bad. Matthew did a good job of creating pretty disastrous scenarios, but I would probably say number 1, because it shuts down the business in its entirety, especially the piece where it encrypts the galvanizing process so that they can't manufacture until they've unencrypted everything. Well, if that's the case, well then you're a ship without wind in the ocean. You're just sitting there waiting for things to happen, and that's a really bad position to be in.
And from an insurance standpoint, is this deemed to be business interruption, or this because it's created from a cyber attack, it's cyber related and not necessarily on the commercial business side?
So this would not be covered under a typical, let's say, general liability business interruption policy. There's nothing physically wrong with your infrastructure. This is a cyber interruption and would have to be covered either under a cyber liability policy, and in certain instances, it would be covered under a crime policy as well. Got it.
Okay. Scenario number 3.
Well, it gets even better for ABC Nuts and Bolts, because let's meet Audrey. Audrey is currently the office manager. Audrey works very closely with Janet, the owner, and receives an email from Janet. asking Audrey to wire $35,000 to a specific vendor for supplies for a job that they have. Need to get it done as soon as possible. Now, what Audrey doesn't realize, because she hasn't gone through any security awareness training, is that this was a phishing email from a hacker posing as a person of authority. And believing this sense of urgency, Audrey wires the money to fulfill the request. Now, you would think that there would be some sort of checks and balances here, but I guess because it's a high stressful environment at the end of the month and Janet needs to get this order placed, Audrey didn't want to hold up anything. So the wire was done. And what are the ramifications? ABC nuts and bolts are now potentially out of $35,000 in wired funds. And Audrey is in the hot seat for authorizing such a payment without actually contacting Janet to say, hey, did you want me to send this $35,000?
And most of these occur at what time?
Right, exactly.
This is the 4 o'clock on Friday,
right.
Get it done before the weekend comes. So Sean, to what extent, are we covered here? Is it a dollar for dollar kind of thing? Is there a minimum, a maximum? I guess you're going to tell me a lot of it depends on the coverage, but from your standpoint.
You're catching on, Josh. You're a quick learner. Yes, it does depend, but I will tell you this: most default cyber liability policies, this kind of fraud loss would have a different limitation amount than the general policy overall. So, for example, if you say, if I have a network attack or a data breach, I want each incident to be covered up to $1 million. Well, from a default, most cyber liability policies will tell you that's fine. That kind of incident's covered for $1 million. But if you have a fraudulent wire transfer that was initiated through some sort of electronic medium contact, in this instance is an email, a fraudulent email, well, we're only going to cover that up to $100,000. So you really have to look at the policies, read each of the line items. This one obviously would be covered. Again, it's human error. There's really no negligence, even though an insurance carrier may say, well, you didn't really have checks and balances, unless they unless the carrier came in and sort of pre-vetted what you were doing. They're going to have a hard time telling you, well, we're going to deny the claim for XYZ. So for the most part, it would be covered.
And in your experience, right, we went through incident 1, 2, and 3. What's the most common that you're seeing from your standpoint?
For the supply chain, it is the phishing schemes. It's incident number 3. Now, on a quick rise is incident number 1. Hackers are not, don't have to be random anymore with the way technology is and the ability to research companies. It's getting easier and easier to target companies. And I've seen on the manufacturing and logistics sides of verticals, I've seen a tremendous increase in incident number 1 because they know if they put your line of business out of action, you're going to be more willing to pay a higher figure faster to get back online and get running again.
Right. Good point. So let's just recap, and then Matt's going to tell us how to make this better. So the first incident, again, was a disguised file was opened, which unleashed a ransomware attack on the company. The company data, time, and money were lost. Cyber incident number 2, a corrupt video file is opened and carries a keylogging service that logs all keystrokes and sends data to a remote host out in cyberspace. And the third incident, $35,000 is wired to a criminal after an employee fell prey to a sophisticated phishing attempt posing as someone of authority at the company. All right, Matt, please tell me it gets better.
I hope so. So why don't we look at this from best practices for preventing cybersecurity breach. So essentially, these items that you see on this screen in front of you are really going to help thwart a lot of the threats that come in to an organization by way of either cyber threats or even end user issues. So an acceptable usage policy is something that needs to be put in place. We're going to identify what that is. Okay? A security awareness training program is critical in the ABC company's case. Policy review and periodic assessments are definitely in order for any organization, especially as they change, staff changes, or a company grows or shrinks in size. Any compliance requirements, business continuity and disaster recovery, and then we're going to get into a cyber liability insurance, Sean. So why don't we dive into what an acceptable usage policy is? An acceptable usage policy are restraints and practices that an employee must agree to for access to a corporate network, website, or large computer system. An acceptable usage policy clearly states what a user is and is not allowed to do with company resources and helps protect an organization from inappropriate use of company technology. Acceptable usage policies aid in providing legal leverage in the event of a security breach. Some compliance standards today require that business partners to have an AUP in place, an acceptable usage policy. And at the end of the day, violation of such a policy could present a host of issues for both the technologically as well as legally.
So, Sean, when you go into an environment, right, and there's a breach, there's an issue, if you find that the company does not have an acceptable usage policy in place, does this help or hurt their position to be in terms of receiving money on a claim?
So depending on the size of the company and the types of policy, an AUP or acceptable usage policy is not necessarily a requirement. However, if you want to further mitigate the risk of having a claim denied, having a documented policy like this should be almost standard now. Everything Matthew's listed at the previous slide and we'll go through is really a requirement now, given the way technology has spread across almost every aspect of businesses. It's almost impossible now to go flying by the seat of your pants and expect somebody to pay for your human error or mistakes. And so starting with this kind of policy is a great first step.
So I'm gonna pose this thought to both of you. I'm gonna say, in my own professional opinion, that I would say under 50% of the companies have a policy like this in place. Is that a fair statement?
I would say the percentage is higher in my estimation, but I'm more of a cynic, I think, than Matthew is.
Yeah, no, I think I go with you on that one, and I also think that certain verticals lend themselves. So, like legal, insurance, healthcare, those industries tend to be, scrutinized a little bit more from an audit perspective. So I would imagine that they probably have a higher percentage, whereas other organizations, typically a lot of manufacturers, wholesalers, distributors, things like that, the percentage is certainly lower.
Got it.
And Josh, do you want to know what the most interesting part of this is? Primarily, everything that Matthew listed on that previous page is really documentation and training. There's very little that he put on there that is directly related to the technology that you use. And that's where I find most companies are very lax. They'd much rather spend the money on what they think is the gold standard of technology, and then they all forget that you actually have to write some documentation that people can reference. You actually have to train your employees because their employees aren't exposed to everything that Matthew and I are on a daily basis. And so it's just paperwork to a certain extent, and that seems to slip through the cracks a lot quicker.
Right, and that's a great segue.
So let's talk about security awareness training. At the end of the day, you can have as much technology in place as you mentioned, Sean, but the reality is human error is one of the main causes for a cyber incident. It all starts with employees who are the front lines when it comes to a hacker and their ability to be successful. It's important to build an internal education program for staff to follow because it provides true security awareness training and teaches team members to be conscious of the outside threats, how to identify outside threats, and more importantly, how to appropriately react once a threat is received. Internal security awareness training programs can be the difference between an employee having a wherewithal to delete a phishing email and an employee who inadvertently hands over the keys to the kingdom. Threats are only becoming more sophisticated in their delivery, packaging, and capabilities. We must become more sophisticated as well. Some compliance regulations require security awareness training as a mandatory part of their vertical as well.
So let's play a game, right? 10 seconds. Can you catch the fish? What on this email looks odd to you? Okay. So the first one is the email address, where it's coming from. So despite displaying a recognizable name, the actual email address is spelled incorrectly. Next, weird wording in the body of an email is a red flag that is not truly from a reputable organization. A good thing to do is to hover over the link you are called to click on and check to ensure it matches up with the sender and that it is secure. Well, I've screwed that up before. And the last one is trademark symbols are not typical for a sender. So again, most likely here you would see a Microsoft logo, not necessarily words. Okay.
Let's talk about policy review and periodic assessments. As technology changes and the business requirements and compliance standards evolve, so should the IT policies that surround them and their use within an organization. Failure to do so could reflect in lost business or worse in the event of a cyber incident. Yearly reviews should be mandatory. Changes to policy upon process change should occur in concert. Essentially, anytime something changes within an organization and a process, the policy should be reviewed and updated as such.
That's an excellent point.
Now, people say, there are so many different guidelines out there and so many people say do this, do that. What's really the right way to go? If organizations follow the NIST 1.1 framework, it's almost impossible to go wrong. NIST is a standard in providing cybersecurity, and especially when it comes to the supply chain risk management process, it's certainly the right framework to dive into. From their 5 stages within the organizational framework, you'll see that it identifies, protects, detects, responds, and recovers from any sort of cybersecurity threat. This would be the first place that I would recommend an organization dive into in efforts to help them meet the right framework for security.
How do you dive in? So take me step one. I've never had to deal with something like this. What does that mean? Am I diving from the small diving board, the big diving board? How does that work?
So the most important thing when it comes to implementing a NIST framework is to work with an organization that understands what NIST is. It's very easy to create additional gaps while trying to close openings. So with the professional, you're going to be able to identify what the vulnerabilities are within an organization. You're going to be able to protect those resources. You'll have a process in place working with a technology provider to help you detect if something were to happen. Now, that's just not antivirus. You may have network monitoring. You may have artificial intelligence in place that are helping identify, let's say, anomaly or behavior-driven traffic that's outside of the norm. You also have processes to respond to such events. Now, an event is not necessarily an incident. So in cybersecurity, you have an event, which is something that could be a potential red flag. Once the event turns into an incident, then you have a situation on your hands, right? So what's really important is to have a way to recover from an incident. And that's where this framework helps build everything all-encompassing around the security management of a business.
Fair enough.
And Josh, if I may add on that one, that NIST framework is actually one of 3 or 4 frameworks that the state of Ohio now uses as a standard for their cyber liability safe harbor. So if you follow the NIST framework and you get sued for a cyber incident in the state of Ohio and you can document and prove that you followed the NIST framework, the state of Ohio will automatically limit your liability for a particular cyber event. So they're the first state in the country to do that, and it's actually a very important carrot in the ever-expanding cyber regulation world.
Sean, that's a great point. It actually leads to I think a bigger point that we're going to discuss later, but each state has its own set of compliance requirements, correct?
Unfortunately, that is correct. Yep.
Okay, so let's talk about vendor risk management. It's a practice of evaluating business partners, suppliers, and third-party vendors before a business relationship is established and during the duration of the business contract. This is an important concept and practice to put in place during your evaluation of your vendors and the procurement process to avoid the following risk: legal risk, reputational risk, financial risk, and cyber risk. Remember, third-party vendors are also a representation of the products and services you're delivering, but they're not the name that your customers are seeing. They're seeing your name. Sean, I'm going to let you talk to the next framework, which is GDPR. I know that you have some familiarity with this, and maybe it's best to let you field this particular slide.
Sure. So GDPR, as the slide says, is a European Union law that actually was passed a number of years ago but went into effect last year. It stands for General Data Protection Regulation, and really what it does in a nutshell is it governs how European Union businesses and individuals, citizens, can have their data collected, utilized, and sold. And I won't even go into the myriad of subcategories and what have you that govern all this, but it is essentially a global law. So that means any U.S. business doing business with a EU citizen or an EU business is subject to these rules and regulations, and they are not minimal. This is a very comprehensive law. It runs hundreds of pages. If you don't have a cyber attorney who understands GDPR and you do business with EU companies or individuals, I highly suggest getting somebody in to make sure that you are compliant, because the fines and ramifications for violating any of the GDPR laws are pretty significant. And from an insurance standpoint, except for Finland and Norway, European Union does not allow insurance to pay for regulatory fines. Now, for a U.S. company who gets fined, that's an open question as to whether insurance would cover that. That's still to be determined, but you have to go on the assumption that you may not be able to have insurance cover a GDPR fine, which could be in the tens to hundreds to millions of dollars. And so you should do your homework on this and understand that now no longer are you just a little domestic business. If you touch another country or you work with another one of their citizens in any kind of business aspect, you have to understand a lot of these countries have their own cyber rules and regulations, especially when it comes to data. So you have to make yourself aware of it, or you have to find a resource who can help you understand where your risks may lie.
Yeah, Sean, I think that's very relevant. I mean, clients, businesses who I've worked with, even the smallest of businesses are, considering the possibility of international growth. So, I don't know that this is on the tip of their tongue with respect to international logistics, but certainly should be. Well, I mean, if you think about it this way, let's say your website is available from any IP address originating in the European Union. That immediately makes you, that immediately means GDPR is applicable to your website. That means you have to have certain wording
and notifications about your cookies, about the data that you collect, about how you track people's navigation throughout your website. That immediately has to be on the website and readily available for people to find out and accept or decline. So it's
spend $1,000 to build my website. Chances are I'm going to get this level of compliance, or no?
No, because the person building the website has to understand from where it's going to be accessed. So if they don't know that it's going to be accessed from the European Union or potentially accessed from there, they may not build the proper language and technology behind it that is required by GDPR. So this is all on the business to be aware of where their technology may lead them or may lead other people to them.
Yeah, I think that's a great takeaway, especially as businesses are constantly looking to reevaluate themselves on social media and, internet presence. This is something that they need to really, have as a talking point as they interview web developers and other things like that. So it's a great takeaway. Thank you.
So we're going to go ahead and jump into a really critical area of protecting yourself from a cyber incident by having the proper business continuity and disaster recovery planning in place. So some of the common misconceptions of BCDR, which is the shortened version of business continuity and disaster recovery, is that our IT team handles it for us, or we currently back up to a USB drive that's taken off site, or we back up our data so we know we will be fine. And lastly, a disaster is highly unlikely, and there's no real risk to invest in. So just some statistics that help kind of shed light on the situation. Did you know that more than half of companies, 54%, experienced a downtime event that lasted for more than 8 hours, one full working day? 35% of outages are caused by natural disasters, 45% of outages are caused by operational disasters, and 19% of disasters are caused by human error. 82% of companies state that their IT infrastructure is not fully prepared for a DR incident. 40% of companies have experienced an unplanned outage in the past year. And 75% of businesses report a ransomware attack has led to business-threatening downtime. 57% recall critical data and or hardware loss.
Great. So I'm a numbers guy, right? So ask yourself this question. How much revenue would your business lose if you experienced a data loss from one of the following? Ransomware, power failure, natural disasters, viruses, human error. So what this BCDR does is it's able to calculate based on certain factors the overall total cost to the business when one of these events occurs. So based on this, using Matt's scenario in the beginning, right? So one day, 12 hours, 50 employees, at a $50 average employee wage is a potential loss to the business of $146,000. And I don't care if you're a big company, I don't care if you're a small company. This is pretty harmful to any business. So I think this really puts things in perspective from an economic point of view. So this is just, if your business is similar, this is something that you have to keep in the back of your mind every day.
And it's important because unplanned outages happen, natural disasters happen. You're not going to get an email from Mother Nature letting you know that she's going to wreak havoc in a certain environment. And again, without the right business continuity in place, if you're just using backup, there's a big chance that you stand to lose a lot of data in the event of a cyber incident.
Right. And
Matthew and Josh, on this point, let's say you're covered for the entirety of the business interruption and the recovery and whatnot, and insurance promises to cover you for the full $145,000. That's not going to happen immediately. That's going to take a month or two or three, depending on how the process works with your carrier. So in the meantime, you're already out that money as real hard currency out of your bank account until you can get it back. And for some businesses, that could be the difference between staying in business and then having to go out of it.
100%. And just to touch on one last thing, there are variants now, and we're seeing it regularly, that backup files are infected by the ransomware. So people don't have a true business continuity disaster, and they're just backing up to a shared file, a NAS device, or a USB. They're going to have a rude awakening, realizing that the backup files are also encrypted, and they won't be able to restore.
So I think a fair point to say is, as we get smarter considering all this, so are the hackers.
Absolutely. Absolutely. So,
Sean, please speak to some common misconceptions of cyber liability insurance.
Yeah, I like the format of Matthew's slide on the business continuity and DR. So I followed along with that, and a lot of this is most businesses don't like to pay for insurance, but they know they have to. So if you come to them and say, well, now, given the ubiquity of technology, you have to pay for another type of insurance, a lot of people are resistant. But what they're finding out is cyber liability insurance is becoming just as necessary as professional liability or product liability or general liability, simply because everything is dependent on technology now or on some form of digital data. And the first and primary one that we get is that we're spending a ton of money on cyber insurance or cyber security, so we're protected. And that's not what insurance is all about. You can spend a ton of money on building the best building, but to Matthew's point, if a tornado or a hurricane comes around with sufficient force, even the best of buildings will suffer damage. So you can't be totally dependent on the security piece.
Sean,
you only need. Yes.
Does having a good, sound cybersecurity insurance policy reduce anything on the business commercial side, or are they totally independent?
What do you mean reduce on the business commercial side?
I'm saying if I've gone and I've protected myself, I've gotten all the bells and whistles because I want to make sure I'm protected on the cyber side. Does that have any impact at all on the premiums I pay on the business commercial side, or are they not looked at as one and the same?
Absolutely, it can, but you have to be of a sufficient size and look to be getting a sufficient policy for it to have an impact on reducing your premiums. If you're a mid-sized company, and again, it all depends on the carrier that you go to. Those numbers will fluctuate as to where the carrier will think that. But if you're of a sufficient size and you're getting a sufficient size policy, absolutely. A carrier will actually invest in doing a third-party audit of your infrastructure. And if they find that it does meet best practices, or let's say that NIST protocol or standards, they will reduce your premium. The reduction of the premium can be significant. But for the most part, if you're a mid-size or a small company and you're buying off-the-shelf cyber liability insurance, it's not going to affect your premium. What it will impact, though, is the ability to have a claim accepted and covered. And that's what you're really looking for at the end of the day, is that if you put in a claim, the carrier is not going to reject it.
Got it.
One of my favorite, getting back to the misconceptions, one of my most favorite misconception is my company is too small to be hacked. Well, there's no such thing anymore. Whether you're targeted or whether you're just getting hit by accident, tens of millions and millions of phishing emails go out every day to just random email addresses. So they may not be looking for you, but they might catch you anyway. And to say that you're too small now sort of is just an ostrich in the sand type of deal. You just want to stick your head in there and say, as long as I ignore it, it's not going to happen. Well, that's not true. It can happen. And a lot of people think their current insurance will cover them, and it doesn't. Cyber is a world unto itself, and carriers are learning as much of the risks now as businesses are. So the best way to judge a risk for a particular type of insurance is to separate it from anything else and treat it as a standalone. And that's how cyber is being done now. So if you think your general liability business interruption will cover your cyber interruption, that is just not the case. And so Three, did you know facts? I mean, this year alone, $11.5 billion they expect in ransomware and cyber extortion costs. The business interruption coverage is expanding. That's the good part about cyber insurance right now. The coverage aspects are expanding, not constricting. However, insurers, as I mentioned before, are tightening their requirements from companies, not necessarily up front, but once a claim is filed, carriers are going back to look to make sure that you've done things right, because what they realize is that they're paying out a lot of claims, and what they're finding is that a lot of these incidents probably could have been prevented with just an ounce of prevention, or a particular training or a usage policy to keep people off social media while at work. So for the most part, they're starting to get smarter and they're starting to get stricter about it. So businesses are going to find that if they do put in a claim, they should have some documentation that show that they've been doing things right on the cyber side of the house.
Right. Sean, so real quick, what kind of things does cyber liability insurance cover?
I'm glad you asked. They're pretty broad, just like technology itself. There are a lot of areas. Obviously, network and information security liability. So if your network is breached, if the information is breached, there are multiple options in terms of the type of event and what was stolen or not stolen, or what might have been accessed. Obviously, ransomware or the cyber extortion, business interruption. Dependent business interruption is a unique one, probably a little bit too complicated to get into, but that is a growing one. If your business is dependent on somebody else's technology infrastructure, there's a way to have your own policy to cover if their infrastructure goes down. Obviously, the funds transfer fraud, we talked about crisis management, event costs, basically that's helping rebuild your reputation. Regulatory defense, more and more federal and state organizations are putting laws or rules in place, and if you have to defend yourself against any of those, that is very helpful. And then obviously if people's personal identity, identifiable information is stolen, credit monitoring services. A lot of people are realizing that they're going to have to pay for multi-year services such as Identity Force or LifeLock or some such. And those can get expensive if you have enough records that are stolen. And then the note that
Oh, go ahead. Sorry.
Nope, I was just going to say the note on the bottom is probably the most important takeaway from this slide, is that when you do have a cyber insurance policy, make sure that you get first party and third party coverage. So first party is you and your business. So if you have a cyber event, it'll cover your business. But because we hold so much data about customers or clients who, to an insurance carrier's point of view, is a third party in that relationship, you want to make sure that they're covered as well. So you want first and third party coverage on these policies.
Got it. So bringing it home, how does CLI best help our supply chain folks?
So for the most part, as I mentioned, I see the growing risk of ransomware and sort of business interruptions. So that's the key that listeners on this webinar should take away, is that from a cyber perspective, a cyber event can be long lasting even when you're back up and running, because you may have remnants of the infection or ramifications ongoing. And so if it disrupts your business, you want coverage. And again, the general liability is not going to cover this one. Cyber extortion. Obviously, if your line of business technology is locked down and you have to pay a certain amount to get it unlocked, a lot of companies much rather pay that and get it going faster, as opposed to trying to wade through and maybe repair it or clean it or some other method. And hackers know this. So for the most part, you want those extortion numbers to be covered, because they are getting higher and higher. And then on the next slide, you're going to see two of the other areas, which is the funds transfer. Still, phishing is still the most ubiquitous form of cyber threats, because it's so easy to generate. And in which case then, to Matthew's point, everybody's running around trying to get things done as quickly as possible, especially at 4 o'clock on a Friday. Sometimes you just don't take that moment to recognize this is not legitimate, and then all of a sudden you're out $35,000. You want to be able to recover that. And obviously reputation, news media, social media have a tendency to really go after companies that don't do things right, and they have some sort of cyber event, even though it's going to happen to everybody. Every business, every person is going to have some sort of cyber event in their life, probably multiples, and it's going to be common, but they still have, there's still damage to the reputation. So you want to repair that. And as I noted before, you want to follow best practices. So you need to take the time to follow best practices, both on the security, the cyber security portion, but also on the documentation and training side of the house.
Great. So I just want to take this time to thank Matt and Sean for their time. And, my bad, one more thing. So ask yourself these questions. One, what would happen if someone at your company clicked on a disguised link containing ransomware that infected your network server? How long can your business experience operational downtime? Do you have measures in place to get back data lost between backups? Would you pay for sensitive proprietary data a hacker holds hostage? Do you have internal policies and procedures in place to limit your exposure from outside threats? Is your staff educated on the importance of security awareness, how to identify a threat, and how to react if one is received? If the answer to any of these questions is no, I don't know, or it costs too much money, then you better pick up the phone and you better call folks like Sean and Matt, because they'll get you straight. So again, I just want to thank Matt and Sean for their time today. Guys, I'll give you 30 seconds. Any final takeaways?
I know that if you reach out to SACS Technology Advisors, if you're not sure of what your real security posture is, I would encourage you to reach out to us, and let's see if we can perform a free network assessment to get a better understanding for us as well as for yourselves to understand where you may be exposed.
Sean, how about you?
I totally agree with Matthew. You have to have your technology and your policies and procedures in place to make sure that when you're talking to me and we're putting a policy or a plan together, that I know with near certainty, not absolute certainty, that you're going to be covered should anything happen to your technology or your data.
And just to put a close on this, from an accounting perspective, there's no better investment that you can make in your business than to invest in the right technology, because as has been demonstrated throughout the presentation, downtime equals lost time, equals lost money, which equals not many happy people. So we thank you for your time. You can look forward to this webinar being released on March 11th. Sandy will be back for the fourth and final webinar, Technology in the Supply Chain Revolution. We thank you for your time.
Thanks all.